and it's on. Okay, perfect. So I will just generate a random number on my phone between 31 and 1, and we will test that specific day in January. So random number generator 31. Okay, and it's 6. So we are going to backtest the 6th of January. Perfect. Let me just find the 6th of January first. And just putting a vertical line. 6th of January is here, and this is the New York Open right here, and this is New York close. So we are going to backtest this time window on the 1-minute chart. Okay, perfect. So I will just replay price here. Actually, not here. Wait, sorry, bear with me, guys. So replay it here, switch to the 15-minute chart, and replay it 15 minutes before this session starts. Perfect, very nice. Okay, so do these lines or boxes bother you here, or I can just keep it here? I think it's fine if it's there.
Yeah, it's fine.
Okay, perfect. So let's just begin on the 4-hour chart. Sorry if I mute myself, but I have to cough because, you know, I get COVID and I'm feeling not the best. So sorry if I mute myself for a minute. Okay, so let's just start on the, aren't you forgetting going live on Discord? Why would I go live on Discord? No. I'm recording a session. Why would I go live on Discord? So basically, let's just start on the 4-hour chart. Okay, so as you can see, let's watch all of the price action in this region on the 4-hour chart. You have to treat your backtesting, you have to treat your forward testing just like your live session. So basically, you have to do everything just like you normally do in the live sessions. Okay, so let's just map out price action. We had this supply zone up here that broke structure and created inefficiency to the downside. Here, as you can see, I will just mark it out. So here's the break of structure to the downside with inefficient push, basically built up liquidity for this supply zone up here and has liquidity just in this region too. So price came back up to mitigate this supply zone, reacted on this supply zone, and swept the liquidity from above this supply, as you can see, swept the first, second, and third top in this region. Okay. After this, price created a change of character on the 4-hour chart. As you can see, reaction on this supply zone, inefficient push to the downside with this candle. And basically this inefficient push created a change of character here. So I will just mark it as a change of character to the downside. Okay. For change of characters, wicks are perfectly enough. As you may know, for breakout structures, we need body breaks. You sound like Kirkir. I don't know who's Kirkir. Okay. So basically, price is moving in this range. I will just mark it out. Price is moving in this range. This is the high. This is the low point. So as soon as this low breaks, that will break a structure to the downside. As soon as this high breaks, that will be a change of character to the upside. Because this high changed character to the downside. And yeah, for breakout structures, we need body breaks. For change of characters, we need big breaks. So as you can see on the downside, on this down line, price couldn't break below. So couldn't create a break of structure to the downside. All of these breaks were just weak breaks. So basically we are still in the downside range. On the upside, as you can see, price broke above with this body closure. So it's a change of character to the upside. So basically we can say the price change character to the upside on this line. So I will just mark this line as a change of character line. So charge up. Okay, let's find the demand zone that caused the change of character to the upside. As you can see, I will just zoom in. As you can see, in this region, we have this downside candle here that caused inefficient push to the upside, but this downside candle is already mitigated by the following wick, and it's straight up in the video course, straight up in the PDF. If the upside candle or the previous candle is mitigated before the inefficient push, we will just use the wick zone. So basically, this is our demand zone on the 4-hour chart that changed character to the upside. Okay, so this is our demand zone. This is our character changing demand zone. After a character change to the upside, price created another inefficient movement to the downside, basically change character on the 15-minute and the 5-minute chart here, because there will be a structural point on the 15-minute and the 5-minute on this candle. But on the 4-hour chart, price change character from this candle, as you can see. This 4-hour supply caused the change of character to the downside, because price change character to the downside too. Because as you can see, it created huge inefficient push, and this was the less structural low, less structural demand zone that caused the change of character to the upside and new high and break of structure to the upside. And this supply zone changed this character, changed this demand zone and changed character with an inefficient push. So, okay, I marked out this supply zone, and if I take a closer look, you can see that price created a pullback here, created a break of structure to the downside, and after the break of structure, it created a change of character to the upside again with another inefficient push. So basically, here's another change of character again, which was caused by this demand zone right here. And we just arrived to our session start. So basically, our session almost opens. So as you can see, before the session opened, price reacted on this demand zone right here in London session. And I will switch to the 15-minute chart and you will see it more clearly, I believe. Switch to the 15-minute chart. But before I switch to the 15-minute chart, I'm going to ask you that everything is clear. Everything makes sense for you?
Yeah.
Yes, perfect. Okay, so let's switch to the 15-minute chart. If you got any question, please just write it down in the chat. So this was the last demand zone that changed character to the upside on the 4-hour chart. So let's see the 4-hour structure on the 15-minute chart. As you can see, this is the downside movement that flipped the overall demand zone right here. So this was our 4-hour supply zone up here on the 15-minute chart. This is our pullback here. This is our break of structure to the downside here. And basically, this was just a week on the 4-hour chart. This is the character changing upside movement on the 15-minute chart and on the 4-hour chart also. So basically, this is our character changing huge movement on the 15-minute chart. And this is our 4-hour demand zone right here. Okay, here's the first question. So we are bearish on the 4-hour chart. Basically, no, because price just changed character to the upside. Basically, we are bearish in this region, but price change character to the upside here. So demand is in control. We have to see how price reacts on this demand zone. If price reacts on this demand zone, which it did actually, as you can see before this session started reacting on this demand zone. If it reacts on this demand zone, price will be bullish on the 4-hour chart because price change character on the 4-hour chart. If price changes character on the 15-minute chart, the 15-minute and the lower time frames will turn into bullish too. Okay, so here's the first question. What do we need after a 4-hour zone tap? What are we waiting for after a 4-hour zone tap? And now please use your microphone if you can.
15-minute chop.
Exactly. 15-minute change of character. Exactly, guys. Who did say this? In your microphone?
It was me.
Who are you? Sorry, I can't see your name.
Noel.
Okay, perfect. Good job, man. Okay, so I'm in the 15-minute change of character or 15-minute flip zone, right? Because as you may know, if price taps the 4-hour zone, either if it's a supply, either if it's a demand zone, we need a 15-minute change of character on that specific 4-hour zone. Let's monitor price in this region. As you can see, on the 15-minute chart, this was the upside movement on the 4-hour chart that changed character here. And basically, price changed character to the downside here on the 15-minute chart from this supply zone, as you can see. So we will have this supply zone on the 15-minute chart. And technically, we can say price tapped the 4-hour supply zone up here. And after the 4-hour supply zone, it changed character to the downside, but we doesn't really count this as a supply tap because considering the fact that this is a 4-hour supply zone, this step doesn't count as a 4-hour supply tap. We need a deeper mitigation inside of this 4-hour zone. That's why we always say, do not trust the first step. If we see something like this, the small percentage of tap of the 4-hour zone, we need a deeper mitigation because basically small percentage of the supply zone has been mitigated, but still left some unmitigated 15-minute zones or 5-minute zones inside of this huge range. So basically this range is lots of pips, and one pip mitigation doesn't really enough for us. So we need a deeper mitigation inside of a 4-hour zone. As you can see, we have this supply zone right here. We will have a supply zone on the 5-minute chart. Also here, we will have a smaller supply zone on the 1-minute chart. So we need a deeper mitigation. Okay, so let's monitor this region now. And as you can see, price tapped the zone here. Basically, we have this supply zone up here that caused the tap. And we have this small structural pullback before the tap, or we can call it actually this supply zone caused the tap because this zone is inside of the tap. So our real supply zone is up here. This is a real 50-minute supply zone that caused, let's see, liquidity sweep caused liquidity sweep. Also, as you can see, here's the liquidity. It swept all of the liquidity. It basically broke structure to the downside here because this was the last structural low point. This was the last structural high point. Let me just point it out. You will see it more clearly. Sorry, just someone texted me. I mean, can you let me? I was disconnected. Yeah, he was joined earlier. Simon, he was joined earlier. Sorry, guys, just a minute. I will let Simon in. Yeah, so I will just point the structure out for you. This was the downside movement. So basically, this is our high. This is our low. This is our lower high. This is our lower low. And everything between this lower low and lower high, I mean, lower high and lower low, is just a ranging structure, as you can see. And basically, this supply zone flipped the whole structure here, reacted on this demand zone down here, or reacted on this some structural level here, and flipped the overall structure and broke structure to the downside here, swept the liquidity from this region, swept the liquidity from this region, and created an efficient push and tapped the zone. So basically, this is a high criteria zone. As you can see, price after the 4-hour tap reacted on this supply zone, couldn't break above this supply zone. So basically, it's not a change of character. Basically, it's not a supply break. It's just reacting and struggling to break above, as you can see. So we can see a clear break actually from this candle. As you can see, this is our 15-minute flip zone. Okay, this will be our 15-minute flip zone because this demand zone flipped the 15-minute supply zone in this region with huge inefficient push to the upside, as you can see. And I'm going just deleting these lines. And also this demand zone swept liquidity from this region. Here, as you can see, here's the first tap, second tap, basically here's liquidity to the line also. So it flipped the zone, swept liquidity, created inefficiency. So it's a pretty valid zone. Okay, what do we need after a 50-minute zone tap? Let me just switch to the 1-minute chart because basically we marked out, or just switch to the 5-minute chart. So what do we need after a 15-minute zone tap? What are we aiming for?
1-minute shock.
Exactly, 1-minute change of character. Good job. Please, guys, don't be shy. If I'm asking something, just feel free to answer with your microphone. Please, it's helping me. It's easier to communicate. So thank you for the answer. We need the 1-minute change of character. That's right. But first, refine our zones, because as you may know, in our plan, we have a zone refinement from a 15-minute zone to a 5-minute zone. So basically, there's no point to refine this zone because it has been already broken. So we doesn't really care about this zone. It has been mitigated. It has been broken. We don't care about this zone anymore. All we care about this is this demand zone. As you can see, we can refine this zone. Sorry, let me just switch back. So we can refine this zone, not much. Just a small refinement, as you can see, to this candle, because the inefficient push has been started from this demand zone, this dodgy candle, or I don't know how retail calls this candle, morning star, I don't know, doesn't really matter. So basically the inefficient push started from this candle and the liquidity sweep and the breakout structure and everything. So this will be our valid refined zone. Okay, as someone said in the chat and with a microphone, after the 15-minute zone tap, we need a 1-minute change of character. So we are on the 1-minute chart, as you can see. And this was the 15-minute refined to the 5-minute demand zone. And this was the 15-minute flipping movement. As you can see, here's the 15-minute supply zone. Here's the 15-minute demand zone. This was the 15-minute flip, liquidity sweep, everything. Okay. So after the 15-minute zone tap, we need a 1-minute change of character. As you can see, price created a liquidity above the zone. Here's perfect liquidity, swept the liquidity to the downside, actually created triple taps on the upside, so created this range. This is the best case scenario for the zone tap, because if a range has been created just before a zone tap, the downside liquidity will be swept into the zone, and the upside liquidity will be swept from the change of character. So two criteria will be instantly thick. Okay, this is the best scenario. So this is exactly what happened. As you can see, price tap the zone, swap the downside liquidity, tap the zone. After the zone tap and the 1 minute mitigation down here, it reversed immediately, huge V-shaped recovery to the upside, swap the upside liquidity here, and change character to the upside on this candle and on several other candles too. So basically, here's the change of character to the upside, here's the change of character, and even here's a change of character with a small wickable. So it changed character on several places. We can mark out our first 1 minute demand zone right here. As you can see, this will be our first 1 minute demand zone. Basically, this will be our entry point. This is a pretty good entry point, as you can see. And actually, if you take a closer look, no, let me just ask you, what else do we need for this zone to be valid? What else do we need to enter on this zone? I will just track our criteria here. So I will just put the first criteria, which is higher time frame mitigation. That is tick. Okay, tick. Second is inefficiency, right? Because it created inefficiency, tick, and it changed character with inefficient movement. So church will be tick. Three criteria are tick. What else do we need?
We need liquidity.
Exactly. Sorry, the fourth criteria is tick also because the liquidity has been swept, and that's tick. And the fifth criteria is the liquidity creation. And let me just see. Actually, the liquidity creation is tick also, because as you can see, here's a perfect liquidity trend line in this region. So perfect liquidity trend line built up on the upside, built up on the downside. So we have a high possibility to sweep all of this downside liquidity, tap this zone, and hop in some longs in this region, hop in some longs on this, demand zone, sorry, and sweep the upside liquidity from this region and from this region. So yeah, basically that's our plan right here. And liquidity creation is a tick again. And actually we have a few more criterias. Let me just write it down here. We had the higher time frame change of character also, and the higher time frame liquidity sweep also. So basically it seems like a perfect setup. We have 7 criteria so far. It's perfect, right? Okay, before we start to forward test price, just monitor this price action. Actually, let me just take a closer look and see. This was a change of character to the downside, as you can see. Here's the structural point, low point, change of character here, high point. So sorry, low point, high point, higher low, higher low, higher high. And after this, price broke below this higher low. So basically, this was a strong low because it broke through the less weak high, and this high broke to the less strong low. So this means this will be a strong high point. So I will just mark this supply out because this is a strong high point, strong supply basically. Mark it out. And I will just keep my criteria here. And let's see what happened in this region. Basically, all of this in this region was just a liquidity build up. Perfect. Okay, so let's just play price forward. But before we starting to play price forward, as you can see, guys, this is our backtesting pre-session routine. You have to treat your backtesting just like your live session trading. Before your live session trading, you always do analysis like this, right? You do the analysis every time before you sit in front of the charts and do the live trading. Before you backtest, you have to do the same. You have to analyze multiple time frames too, 4 hour, 15 minute, 5 minute, 1 minute. You have to do the same. And after you did the same, you can play price forward. You can start the backtesting session, but you have to prepare for every single backtesting session, just like for the live sessions. And basically, that's like a simulation. You can call this live trading because you're trading your backtesting just like your live trading, right? So let me just drink. Okay, so I just play price forward. And let's see what happens. Okay, as you can see, price, very nice. Let me just close this zone. It has been mitigated. price actually swapped the upside liquidity from this region here. As you can see, swapped the triple tops with this movement. And I will just remove this line so it doesn't bother confuse us. So it basically, as you can see, price broke structure. I mean, change character here to the downside here with this movement, and after this price change character to the upside here and tap this supply zone up here. So on the 1 minute chart, we will have this demand zone, as you can see, that caused the inefficient push to the upside, caused the liquidity sweep, caused the break of structure, caused the supply top, caused everything. Okay, a question. Can we open a position on this zone? And why?
That's a lunchtime zone.
Exactly, man. Good job. That's a lunchtime zone. And one more reason why can we open a position on this zone?
Liquidity down.
Exactly.
Because we
One more reason.
Supply is in control now.
That's all. That's all. Good job, guys. Very nice. Okay, so basically we can't open a position on this demand zone because supply is in control. Liquidity to the downside, we can't open inside of a liquidity pool. And what was the third? What did you say?
It's part of liquidity.
Yeah. Sorry. The lunchtime zone. Yeah. So basically, there's 3 confluences for not to open on this zone. So basically, it's a lunchtime zone. This zone will be broken. All of these zones in this region are lunchtime zones. As you can see, lunchtime opened here and closed here. So basically, all of these zones will be fake. So this is the liquidity leading down to this demand zone. And right now, all of our time frames are bullish. The 4 hour, the 50 minute, the 5 minute, the 1 minute, all of them are bullish. So basically, our pro trend is bullish, our counter trend is bearish. Why am I saying that bullish is our pro trend? Because 4 hour change character. Let me just switch back to the 4 hour chart. 4 hour change character here to the upside, as you can see. Here's a change of character to the upside. Change character with huge innovation to the upside. After this, price tapped the 50 minute, the 4 hour zone and change character on the 50 minute to here. After this, price tapped the 50 minute zone and change character on the 1 minute too. So basically, demand chain is building on every single time frame. 4 hours is bullish, 50 minute is bullish, 1 minute is bullish. So I'm going to aim this demand zone. I'm going to open a position on this zone. I'm going to set a position on this zone. This is a risk entry, but knowing the fact that every single time frame is bullish and every single time frame is changing character is a high confirmation for the risk entry. And as you can see, this demand zone has seven criteria. So this is a really strong criteria zone. So let me just set a position on this zone with a 2 pip stop loss as usual. Okay. And let me just find a good target for this. For example, this supply here. I will just change the color. This will be our target point right here. Basically, this supply zone change character on the 1 minute and on the 5 minute too. As you can see, here's the last demand zone, price change character on the 5 minute. This is our less unmitigated higher time frame supply zone. We are aiming this zone. Okay, but this is far away. This is far away. Let's see what happens between. Let's play price forward. Price is reacting on that lunchtime zone, as you can see. Not a strong reaction, not a strong rejection, but it reacted on that zone. Let's see what happens next. Reacting again. So price is basically struggling to react on this zone. Okay, one more reaction. And actually, okay, this zone is broken. We can call it as a break of the demand zone, as you can see. And technically the break happened, sorry, I didn't mean to delete it. So technically the break happened from this supply zone up here. Okay, so this could have been a risk entry right here. Let me just play one more candle. Price broke below the demand zone. Actually, price broke below the demand zone with inefficient candle, as you can see here is inefficiency. Swept the liquidity here, swept the liquidity from this region and heading down to the demand zone. So what can we do in this case? Basically, we can risk enter on this supply zone, the 50% of this zone, because this is an equilibrium entry point, as you may know, because the wicks are big. No, sorry, let me just ask you, why do we call it as an equilibrium entry point? What's the reason? Just answer, please.
because Because the wick is bigger than the body of the candle.
Exactly. Good job. The wick is bigger than the whole body. So this is a nuclear entry point. Let me just ask, can we resist trade? Can we happy not trade in this specific position?
We don't have boss.
We have a change of character. We have a break of demand. We have this demand zone. This demand zone is broken with immersion push, liquidity sweep.
We could take this entry, but we don't have any liquidity above this zone.
Yeah, actually, yes. So it depends on your own personal trading style. If you are willing to take a risk entry on this supply zone, you can. So let's just say we are taking a risk entry on this supply zone because the criteria are pretty much fit. So let me just set a 2 pip stop loss. Sorry, can you see my screen still?
Yeah, just keep going.
Yeah.
Okay, so setting an order limit on this zone and targeting this demand zone. And basically, if this position hits TP, as you can see, the risk reward ratio is just enough. It's more than 5 risk reward ratio, so we will risk this trade. Okay, so if this trade hits TP, we will tag into another trade immediately, as you can see here, because for higher time frame, intention is still pretty bullish. The 4 hour, 15 minute, 1 minute, everything is bullish. So, okay, let's play price forward. Actually, I can click on this. Okay, let's play price forward. Okay, we are in the position. That was quick. We are in the position. Okay. That kept us in. Swap the liquidity from this region. As you can see, this candle swapped the liquidity. So the 2 pip stop loss were just enough to cover the liquidity sweep. Let's see what happens. Okay. And we are out from the position. Okay, so this was a risk entry. We are out from this position. That's perfectly fine. Okay, let's play price forward. Price swept the liquidity, price swept us out from the trade and heading down to the demand zone. Actually, it tagged us into the demand zone. Let's see what happens next. Okay, we are in the trade. Strong reaction, perfect. And right now we are in break even, as you can see, because price broke the previous lower high. Because as you can see, this is our structure here. High point, low point, high point, low point. Price reacted on this demand zone, this 1 minute demand zone, the overall character changing demand zone, reacted on this demand zone, and change character here to the upside. So basically we are setting on break even into setting our stop loss into break even. Okay, but we have a change of character also. So we will have another demand zone in this region. I have a doubt on break even. Why would you have a doubt on break even?
Because it breaks the structure.
Yeah, actually, can you hear me?
Yeah, I can hear you.
After we putting our stop loss at BE break even,
yes,
price return to that demand zone. It will react to that, but some cases it was chance to break out our BE also, but still we are in trade.
Basically, we always set break even if price breaks the last previous substructure. So in this case, this is our previous substructure. Price broke this substructure. We are setting our stop loss to break even because we are protecting ourselves from losses. The demand zone that caused the change of character is higher than our break even point, so it's pretty safe to use break even in this case. Okay, so let's just play price forward. We are in break even. Can we enter from the candle that flipped? You mean this one? Yeah. Right now we can't. We need liquidity for confirmation because it's a continuation entry. If we have a liquidity, then we can enter. Let's see what happens. It perfectly broke above with body closer, as you can see. We are waiting for liquidity creation on this zone. I won't risk it without a liquidity creation. Okay, perfect. Actually, price created liquidity. As you can see, here's a liquidity line. This is our liquidity for the zone. Okay, I don't know if price will tap this zone before it reverses back down to this zone. We will have to see what happens. But basically, for this zone, for this entry zone, we have more criteria. So we can set an order limit on this zone. And we can use our gambucks here. We can use our gambucks. We can set an order limit on the 50% of this candle. And let's see. Yeah, the full body doesn't cover. So we are just setting an order limit on the 50% of this candle and targeting the same supply zone up here. Okay, let's see what happens. Price coming down to take the liquidity, creating more liquidity, as you can see. So it just built up more liquidity for this zone. Let's see what happens next.
Flipping, I have a question.
Yes.
Can I use the upper candle which created efficiency? Is it safe to enter from that?
From this candle?
That specific, yes.
Basically, you can say that's a flip zone, and that created inefficiency. This candle doesn't have inefficiency. So I just test both scenarios out.
Okay.
For the safer scenario, we will use this downside candle for demand zone, but this downside candle is missing inefficiency here. It created inefficiency here, but basically we have this upside candle too. So let's test both scenarios out. Okay, on this zone we will use the gambox again. Let's see. I will just set the order limit on the 50% again. Set our 2 pip stop loss. Here's the 2 pip. I will just delete the gambox from here and here. Sorry. So, but the target remains the same. So in this case, you can have the risk. You can set a 0.5% entry on this candle and set a 0.5% entry on this candle too. So you can have the risk. You're not using 1% on here, 1% on here. You are using 0.5 on here. You are using 0.5 on here. You can have the risk. Okay, let's test this out. What happens? So our stop loss on the current trade, so on this trade, is still in break even, because as you can see, here's liquidity. We can set our stop loss just below the liquidity. So we can set it here, because if price sweeps the liquidity, we will become liquidity. So we are keeping our stop loss in the break even. Okay, let's see what happens next. We've got 2 pending orders. Price is coming down to grab the liquidity, reacted on that zone, as you can see, and tagged us into that zone. Okay, we are tagged in. Sorry, let me just adjust this. So we are tagged in. Let's see what happens. Okay, actually, I'm going to close this because I assume you can't see shit. And close this too, and close this too. Okay, so basically what's happening right now is price reacted on the upper demand zone. Reacted on that upper demand zone, as you can see, tagged us into the trade, and reacted on the downer demand zone also on the higher area of this candle. So it doesn't mitigate the downer area, the 50% of this candle yet. Let's see what happens next. It just reverses, comes back down to mitigate it once again, and just reverses again. Okay, so basically, as you can see, price mitigated both of the zones, but doesn't break below the first zone. So basically, the bottom of the first zone, the upper zone, is here. So it doesn't. Let me just close this zone. You can't see it. So here's the bottom of this zone, and it doesn't break below this zone, but mitigated the downer area too, and reversed after the mitigation immediately, and broke this trap structure. As you can see, here's the substructure. It broke to the upside. So we are setting our stop loss into break even. And if we are setting a stop loss into break even on this position, we are going to delete the second order from this region, and there is this demand zone. So basically, we have a break even runner on this trade. We have a break even runner on this trade. And let's see what happens. We are both targeting this zone. Let's see what happens next. Oh, okay. Hit TP straight up. Okay, that's nice. So we have double TP hit on this position, on this position. I'm going to first position, second position here, first position, there was, let me just adjust this zone, 8.9% profit. And on the second zone, that was 8%. Yes, that was 8% divided by 2 is 4% profit on this zone. So overall, we booked almost 13% profit from these 2 trades. I have a question about the first short entry. Yes, let me hear that question after the session. Okay, let's continue the session. So right now we have.
I have a question, sir.
Please, after the session, let me just finish.
Okay.
Let me just finish
Yeah.
this.
Okay, thank you. Sorry.
Session almost closed. We've got 1.5 hours remaining from the session. So let's see what happens. Price reacts on this supply zone, broke above this supply zone, created this demand zone right here that caused the break of this overall supply zone. I'm going to close this zone, and we have a new demand zone right here that broke above this supply zone. Actually, this movement could have been a liquidity sweep from this region also. So let me just play price forward again. And this demand zone will be broken, I believe, because this is an inside bar. Inside bars are mostly broken. Let's see what happens. Price reacting on this zone, struggling to break below and break above, struggling inside of this zone, as you can see. Basically doing nothing. Reacted on this zone. Didn't create a breakout structure to the upside. It created with VIX, but V doesn't count it as a breakout structure. Okay. And it broke below the zone. Okay. That's a confirmed break. Let me ask you, what will you do in this scenario? Actually, this isn't our session close. Sorry, this is our session close. Okay, so what would you do in this scenario? This demand is broken from this candle. Mark the supply zone.
We could take counter trades again down to the initial demand zone.
Yes.
But no, it's quite okay because we didn't came from any other supply chain.
Exactly.
So we can use not confirmation entries, but risk entries.
So basically on this supply zone up here, or you meaning this demand zone?
This demand zone, but also on the supply zone.
Yeah, I wouldn't use risk entry on this demand zone in this case, because actually it's not similar to the first one, because the first one had a 4-hour change of character, had a 15-minute change of character, had a 1-minute change of character, had every single confluence, had every single criteria, eight criteria entry. So we could easily use a risk entry on this scenario. But in this scenario, price actually broke above this supply zone, broke above this extreme supply zone, and created this demand zone. That's right. That's created this demand zone. But we are missing some criteria. The higher time frame basically is bullish, but price just changed into bearish in this region. And I would consider this entry as a risk entry because it doesn't have as much criteria as the first entry.
Okay.
So the question here is, will you use a risk entry on this supply zone? Will you use this supply trade? Would you happy in this supply trade down to this demand region? I'm asking it from everybody.
I think we miss liquidity again.
Yeah, we missed liquidity. That's right. So price actually didn't really create liquidity just below this zone, and we got no liquidity here for the shorts.
I'd go up to the extreme supply also.
You would wait for this supply, right?
Yes.
That will be the best. That will be the best because this supply zone, that's the right answer actually. This supply zone could be liquidity for the upper zone because, as I told you several times, if you have a structure like this, let me just draw it down. If you have a structure like this, here's the demand zone. Here's our flip zone. This supply flip that demand zone. But we have liquidity just above the supply zone, just like in this case. So as you can see, here's liquidity. We can consider this as a liquidity leading up to this supply zone. So you can't really open a position on this flip zone because it has liquidity. And it will be safer to use the extreme zone as our entry point than the decisional. So in this case, I will use the, so let me just remove this drawing. I will use the extreme zone, so this one, because it has a liquidity, as you can see. And let's see the 50% entry in this case. With a 50% entry, it covers the whole zone. And we could target this downside zone, this downside demand zone. But if I take a closer look, you actually can't really open a position on this zone too, because here's liquidity again. So you can decide if you open a risk entry on this zone, considering the fact that here's liquidity again, here's the first tap, here's the second tap. You can decide if you want to open a risk entry or not. But for me, it will be risky considering the liquidity above. So I wouldn't open a position on this specific supply zone considering the liquidity. So I'm asking you guys, what will you do in this case? Will you use a liquidity entry? I mean a risk entry considering the liquidity? Or would you just skip on this trade?
Just wait.
Just wait. Yeah. That's exactly the best solution right here. So just wait. Okay, that was quick again. Price reacted on that supply zone and didn't really sweep. Let's see what happens next. Okay, it didn't really come back to sweep the liquidity from the upside, but if you would have set an entry limit on the 50% of this candle, that wouldn't even be a tag, so this becomes invalid. Price actually is breaking below this demand zone, as you can see. Check the 15-minute structure. Sure, I will check the 15-minute structure if you want. Here's the 15-minute structure. Actually, as you can see, this could have been just a liquidity sweep. So price could just turn into bearish into some deeper demand areas. For example, this one could be a good entry opportunity because here's the liquidity trend line building up for this demand zone, as you can see. Here's the liquidity trend line. We could call this as our demand zone. And price could just turn into bearish on the 15-minute chart and on the 1-minute chart down to this demand region. And sweep the liquidity. This demand region could give enough power, enough fuel to price after the mitigation, the liquidity sweep, and we can hit higher supply areas. So I will just refine this demand zone on the 5-minute chart. This is our refinement, or even this is our refinement. Okay, and switch back to the 1-minute chart, and let's see what happens. Here's our liquidity line. Price actually broke below the demand zone with a body break, and the actual break happened from this candle. This is our breaking candle. This is our supply breaking candle. Let me just play price forward. I will wait for liquidity to enter on this supply zone. To enter on this supply zone, I will wait for liquidity somewhere around here, because I will still consider this as a risk entry. Let's play price forward again. Liquidity has been formed. The best scenario will be if price broke structure to the downside here with this movement, and that will be perfect. My favorite setup scenario, because we have a supply zone, we have a break of demand zone in this case. As you can see, we have a break of demand, we have a liquidity built up for the supply zone that was leading to a demand break. And after this break of structure to the downside here, that would be the best scenario, because that would trap sellers again. Because lots of sellers will enter on this supply zone, this freshly new formed supply zone that was created the break of structure to the downside. Lots of sellers will enter on this supply zone. They will become part of the liquidity, and this will be tag us into the trade. So this will be the best case scenario. I'm waiting for this. Let's see if it happens. Oh, perfect. Break of structure happened. And actually, here's the liquidity. I will just mark it as the liquidity, as you can see. And I will set an order limit on the 50% of this candle, because this candle is pretty huge. This is a pretty huge candle. Let's hope if the sell limit covers the whole zone on the 50%. Actually, it doesn't really cover the zone. It doesn't really cover the zone. But in this case, I will just buffer my entry a little bit on the 25% of the zone, or just a little above, because this is a really high confidence trade. This is a really good entry opportunity because it's written down in the PDF. That's basically my favorite setup. That's basically my favorite setup, as I just drawn for you. So let me just draw it again. Supply zone, breaking through demand zone, creating a liquidity, breakout structure to the downside. Here's a demand break. Here's this supply zone that has created the demand break. Here's the liquidity built up for this zone. Here's a freshly new formed supply zone in this region. This is a trap for the new sellers. This is a trap for retail traders. So price basically reacts on this zone a little bit, or just breaks above immediately, collect more orders from the sells, reacts on this zone, and tags us into the trade. This is my favorite setup. It's written down in the PDF. So yeah, I'm willing to buffer my entry point in this region, or just buffer my stop loss, or just buffer both. I'm not buffering my stop loss, actually. I'm always keeping the 2 pip stop loss. I'm just taking my entry point a little above, so it covers the whole zone. And I will wait for the tag. I will wait for the tag. Let's see what happens. Actually, as you can see, price reacted on that supply zone that I was talking about. This is the structure breaking supply zone. Price reacted on the supply zone, collecting more orders. As you can see, here's the supply zone. Price came up, mitigated this supply zone, reacted on that zone. And after this, as your name rings a bell, let me just admit you. Okay. So reacted on the supply zone. Here's the downside candle that was a reaction and broke above the supply zone. So more likely this liquidity will be swept and this supply will be tagged. Let's see what happens next. Okay. We are not tagged into the trade yet. Okay, we are tagged into the trade. Wow, perfect. And basically we can, what would you do with your stop loss in this scenario? Would you leave it like this? Would you set it to break even? What would you do in this case? Well, would you set it to break even?
Yes, I would, because it makes a change of character.
Exactly. Broke the last substructure here and change of character to the downside. Actually, that's the good answer. So our break even, I mean a stop loss is in break even. Okay, let's play price forward. Perfect. We are keeping our stop loss in break even. Or actually, at this point, we can just adjust our stop loss to this region because it's creating impulsive movements to the downside. Or just wait for this low to be broken, and after this low breaks, we will set our stop loss just above the last structural high point. Let's see what happens. That is broken, and TP hit actually. Very nice. So we didn't really have to buffer adjust the stop loss. So TP hit. Where's the position? It here's okay. So the third entry. Third position is how many? 10%, 10 risk reward on this trade actually, and we took a loss. We took a loss on our fourth position, -1%. So actually the session almost session is about to close. As you can see, this is our session closing point. Let's see what happens after. I believe this demand zone will be broken because we have a huge liquidity, and yeah, but this is the demand zone that was built up for the liquidity. So yeah, let me just play price forward. It reacted on that demand zone, and our session is closed. So basically, this is our overall session. Let me just calculate these. 10, 14, 23% on this session, on this single New York session. With the trades that fits in our plan, with high criteria entries, we booked 23% in this session. Okay. So, have you guys got any question?
Yes, sir. I have a question. I didn't go through the course yet.
Yes.
But I just want to ask you, in this region, when you took this trade here,
Yes.
can you consider these weeks liquidity or no? These weeks.
Draw it again, please.
Yeah. Here we have the price has went above our and stopped us out. Do you consider these as liquidity wicks here?
Yeah.
Or no?
That was liquidity. I even said that this was liquidity, and we were flat out from the trade because of the liquidity. Basically, this was liquidity. Price swept the liquidity with this movement. Actually, this candle was liquidity too, and this candle swept the final liquidity and a reverse price to the downside. So basically, after the liquidity sweep, it reversed immediately with high impact, as you can see.
Yeah. Okay.
Yeah.
Thank you. That was my question. So.
Perfect. I'm going to grab a cup of water, guys. Until I do this, I will just stop the recording because I don't want to record the question and answer section. So I just stopped the